Zero-knowledge proofs are one of the most intellectually beautiful and practically impactful developments in modern cryptography. The concept, first formalized by Goldwasser, Micali, and Rakoff in 1985, allows one party to prove to another that they know a piece of information without revealing any information about that knowledge beyond the fact of its possession. The implications for financial applications are profound. Consider the requirements of institutional compliance. A bank must verify that a customer's account balance exceeds a minimum threshold without seeing the actual balance. A regulated investor must prove they meet accredited investor criteria without disclosing their net worth. A counterparty must verify a transaction is compliant without accessing the transaction details. In each case, zero-knowledge proofs provide a mathematically rigorous solution that was previously impossible. Beyond privacy applications, ZK proofs have emerged as the most promising mechanism for blockchain scalability. ZK rollups use proof systems to verify that thousands of off-chain transactions were computed correctly, allowing Ethereum mainnet to verify a single proof rather than re-executing every transaction. This is how ZK technology is simultaneously solving blockchain privacy and blockchain scalability, making it arguably the most important cryptographic development in the digital asset space. The technical distinction between ZK-SNARKs and ZK-STARKs has practical implications for institutional adoption. ZK-SNARKs require trusted setup, a cryptographic ceremony where parameters are generated by a group of participants, after which the individual contributions are destroyed. If any participant retains their contribution, they could theoretically forge proofs. Multiple SNARK projects have conducted elaborate multi-party computation ceremonies to minimize this risk, but the trusted setup represents a philosophical compromise for systems claiming to be trustless. ZK-STARKs eliminate the trusted setup entirely through a different mathematical construction, and they offer the additional advantage of being believed to be quantum-resistant. The trade-off is larger proof sizes that make on-chain verification more expensive. For applications where the security assumptions of a trusted setup are acceptable, SNARKs offer better efficiency. For applications requiring the strongest possible trust minimization, STARKs are preferred. Recursive proofs represent a key enabling technology for ZK rollup scalability. By allowing a single proof to verify the correctness of other proofs, recursive systems can aggregate the entire transaction history of a ZK rollup into a single compact proof, potentially enabling verification of millions of transactions in a single Ethereum mainnet transaction. This is the technology underlying the long-term scalability vision for ZK rollups at truly global transaction volumes. The ZK rollup architecture achieves its efficiency gains through a fundamental insight. Verification is much cheaper than computation. Ethereum mainnet does not need to re-execute every transaction in a ZK rollup batch. It only needs to verify the proof that all transactions were executed correctly. The mathematical properties of ZK proofs guarantee that a valid proof cannot be generated for an incorrect state transition. For institutional users, the practical implications are significant. ZK rollup transactions are final on Ethereum in minutes, rather than the 7 days required for optimistic rollup fraud proof challenges. The security guarantee is cryptographic rather than economic. It is not possible to submit a fraudulent ZK proof, regardless of economic incentives. This makes ZK rollups suitable for high-value institutional settlement applications where instant finality and cryptographic security are requirements. The proof generation step is the primary bottleneck in the current ZK rollup architecture. Generating a validity proof for a large transaction batch requires significant computation, introducing latency and infrastructure costs. Purpose-built ZK proof generation hardware, now being developed by several semiconductor companies, is expected to reduce proof generation times and costs dramatically, potentially making real-time ZK proof generation economically viable for applications requiring instant finality. The ZK rollup ecosystem has grown from a theoretical category to a multi-billion-dollar infrastructure segment within a few years of development. ZK-Sync Era and StarkNet have emerged as the leading general-purpose ZK rollup platforms, attracting significant DeFi activity and developer talent. Polygon's ZK EVM and Linear have the backing of established blockchain infrastructure companies, bringing additional institutional credibility to the sector. For institutional investors, the ZK rollup landscape represents an opportunity to gain early exposure to the technology layer that most analysts believe will eventually dominate Ethereum's Layer 2 ecosystem. Optimistic rollups, while currently leading in TVL due to earlier launches and first-mover advantages, require longer settlement times and rely on economic rather than cryptographic security assumptions. As ZK proof generation hardware matures and proof times decrease, ZK rollups are expected to supersede optimistic rollups for most institutional applications. The infrastructure tokens of major ZK rollup networks, including ZK, ZK-SNARK, STRK, STARKnet, and POL, Polygon, represent investable exposure to the ZK scaling thesis. These tokens serve as governance and potentially fee payment assets in their respective ecosystems. Institutional evaluation of these tokens requires assessing protocol revenue, token distribution, governance rights, and long-term fee capture mechanics alongside the standard digital asset risk framework. The privacy applications of zero-knowledge proofs are particularly relevant for institutional financial infrastructure, where the tension between regulatory compliance, requiring data disclosure, and competitive privacy, requiring data protection, creates persistent friction. ZK proofs resolve this tension by allowing cryptographically verifiable attestations without data disclosure. Proof of solvency is perhaps the most immediately actionable application post-FTX. The exchange collapse demonstrated catastrophically that unverified financial disclosures from centralized exchanges are insufficient for institutional risk management. ZK proof-based proof of solvency systems, where an exchange cryptographically proves its assets exceed its liabilities in real time without revealing individual account details, would have made FTX-style fraud detectable months before the collapse. Several regulated DoFi projects are building ZK proof systems specifically for institutional compliance applications. Aztec Network has developed a privacy layer for Ethereum transactions that allows institutional participants to transact confidentially, while generating ZK proofs of regulatory compliance that can be provided to regulators on request. This architecture, combining on-chain privacy with off-chain regulatory transparency, represents the most viable path for institutional adoption of privacy-preserving blockchain technology. Zero-knowledge proofs are not a technology without risks, and institutional adoption requires careful evaluation of both the current limitations and the regulatory environment. The audit complexity risk is particularly important. ZK circuits are written in domain-specific languages that require deep mathematical expertise to audit correctly. Several ZK projects have had critical vulnerabilities discovered in their constraint systems that would have allowed unlimited token minting or proof forgery. The expertise required to audit ZK systems is scarce and expensive, creating a concentration risk in the audit market. The regulatory uncertainty around ZK privacy applications is a genuine concern for US and EU regulated institutions. The OFAC sanctions against Tornado Cash, a ZK-based transaction mixer, established that privacy-preserving blockchain protocols can be sanctioned entities regardless of their decentralized nature. Institutions building on ZK privacy infrastructure must navigate a regulatory environment that is actively developing standards for what constitutes permissible privacy versus prohibited transaction obfuscation. The proof generation latency challenge is being addressed through dedicated ZK proof generation hardware, but the timeline for this hardware to reach institutional production readiness remains uncertain. Applications requiring real-time ZK proof generation at scale, such as high-frequency trading on ZK rollups, may face performance bottlenecks that limit their economic viability until proof generation hardware matures. Zero-knowledge proof technology is transitioning from a theoretical cryptographic curiosity to a critical infrastructure component of the digital financial system. The dual application of ZK proofs, simultaneously enabling both blockchain scalability and institutional privacy, makes this technology uniquely positioned at the intersection of the two most commercially significant challenges in institutional crypto adoption. For investment committees evaluating digital asset strategy, ZK technology warrants dedicated analysis as both an investment thesis and an operational capability. The ZK rollup ecosystem represents an investable exposure to the scalability infrastructure layer that most analysts expect to dominate Ethereum's Layer 2 market as proof generation hardware matures. The privacy application layer represents an operational capability that forward-looking institutions should develop as compliance requirements for on-chain activity become more sophisticated. The institutions that invest in ZK understanding and capability today will be significantly better positioned than those that wait until the technology is fully mature. The cryptographic frontier is moving faster than most institutional adoption cycles, and the window for first-mover advantage in ZK-based financial infrastructure is open but not indefinitely.